Hi folks, and welcome back to Meaningful Money. Okay, here I am in a familiar location. This is St Loy Woods. I'm here on my trusty old faithful log again. This is my get out of the wind filming location because it is blowing a hoolie today, as they say in these parts. Okay, it's been an incredibly tumultuous week in the stock markets. I speak to you on August the 7th, that's a Sunday morning, and we've just been through what is without question the most volatile week in stock markets in the last 3 years, since the very worst days of the credit crunch. So I thought I'd do a video just to try and explain as best I can what's going on, and more importantly what you should do and not do right now. So as ever, before we get into the meat, my good friends down here at 7 Investment Management, I must give them a huge vote of thanks because they sponsor Meaningful Money and help me to keep going. I'm very grateful to them for doing so. So what's gone on this week? Well, over the week, the FTSE 100, which is the index of leading UK companies, is down nearly 10% in 1 week. That's a big number. In one day, on Thursday, the S&P 500, which is the biggest index in America, was down just under 5% in a single day. You know, these really are big numbers, and we haven't seen falls like this since Lehman Brothers went under, which was sort of a big crisis point in the credit crunch towards the end of 2008. So, what's triggered this? Well, you know, it's really hard to sort of identify one thing. In fact, I think it's impossible. I heard a good analogy on the Financial Times website, which talked about it as an avalanche. You know, you see the effects of the avalanche and it's a big deal, but you don't ever know what the one rock was that fell out of place which triggered the whole thing. And I think that's the case here. We've got a combination of factors. So we've got the American debt ceiling talks, which finally came to a head last Monday, Tuesday, and you've got the Eurozone sovereign debt crisis, you know, governments, countries in Europe like Greece and Ireland in trouble and needing to be bailed out. In the last Meaningful Money video, which was episode 134, I had an interview with Justin Urquhart-Stewart of 7 Investment Management. He explained all that as only he can, so do watch that for a bit of context here. You know, on top of those two big things, you've got worsening economic data. It looks like the world economy is slowing slightly, so you know that's a concern. And all these things combined with many other things as well simply lead to nervous investors. And that, I think, something triggered it. Something reached a tipping point this week, and we saw a really, really bad week in stock markets. So that's kind of what happened. What should you do? This is far more important. Your response to these things is more important to what's actually going on. So the first thing you must do is to remember that if you have a blended portfolio, a broadly spread, widely diversified investment portfolio, then the performance of your portfolio will nowhere near reflect the sort of big drops in the individual stock markets. Those two figures that I just give you about markets that have dropped, they're just shares. Okay, you've also got bonds and gilts and property and timber and oil and gas and gold and infrastructure and all these things, and if your money is spread across there, then your portfolio will not have gotten down anything like as much as the headlines you're reading about this weekend. So you know, you need to take comfort from that. Diversification, spreading your money around, really does work. It was certainly shown from my point of view. I take no credit for this because we outsource our client fund management to 7IM as it happens. But for us, you know, stock markets in the worst points of the credit crisis were down 40%. The worst client I ever saw was down about 12%. So, you know, that's incredibly comforting to know that diversification, spreading your money around, actually reduces risk. So remember, a blended portfolio, a diversified portfolio, will not have gone down anything as much as the headline rates you're hearing about this week. Second thing you must do is not panic. Don't panic. Heed the words of the most successful investor that's ever lived. It's a man called Warren Buffett, one of the world's richest men. And he says the worst enemies of investors are excitement and expense. Well, what we're talking about right now is excitement. It's not really the right word, really. It's quite a positive word. But the panic that's gripping investors at the moment is the worst thing that you can take heed of. It's your worst enemy when it comes to long-term investing. And that takes me to the third point, which is to remember why you invested in the first place. hopefully, if you heed the message of these videos and this whole website really, it's that money is not there for its own sake, it's there for a reason. So if you are investing for a reason, be it comfortable retirement, send your kids to private school, pay for a wedding one day. And so if you're heading towards a goal, which is a long-term goal, which it should be if you're investing, then you must not be swayed unduly by very short-term movements in the markets. 1 week, 6 months, even 1 year is a very short window of time on which to base any kind of snap decision. So remember why you invested in the first place and let that give you some context for what you do now. And just remember, if you're invested for the long term, a short-term blip in the market, no matter how severe it may seem, is not a reason to make any kind of a decision. And then finally, for goodness sake, please ignore, or do your best to ignore, the sort of panicky headlines in the mainstream media. You know, Friday morning there was words panic, crash and crisis on the first 3 front pages that I saw. Apparently Robert Peston is the BBC's sort of business editor, who I would gladly throttle if I ever met him. He's been using phrases like credit crunch 2. You know, this is just not helpful. It just exacerbates the situation. So well done for watching Meaningful Money. Hopefully I'll give you some balance to that. Watch the video with Justin again last time and get some good rational information. Read the FT if you want a really balanced view on these things. But certainly be careful how much you take in and don't let it sway your decisions. So remember that a blended portfolio will protect you from the worst of the stock market falls. Don't panic, for goodness sake. Remember why you invested in the first place and let that inform your decisions. Remember the longer term view is more important than the short term. And fourthly, be careful what you take on board from the mainstream media. I hope that's helpful. Please leave any questions and comments underneath the videos here and I'll do my best to answer them. I hope this has been helpful and thank you very much for watching. Next time we're going into a new series on equity release. It's going to be a big series, so look forward to that. Thanks for watching and I'll see you next time.